Hello, it is Tuesday, February 17th. Kind of want to talk about where equities are today. And, by and large, equities have been topping out for the last few months. And with how prices have been performing relative to these moving averages, it definitely feels like we're in more of a neutral territory as opposed to a strictly bullish territory. And I wanted to talk about how momentum and rotation kind of works in the context of that bullish to neutral transition. In general, I think you can basically say that all stocks uh, that have been going up in the last couple of years have a momentum factor to them. And you can kind of group another part of the stock universe that is purely value. For example, like Nvidia uh, has been a momentum stock. Momentum has done well. If you use momentum on this stock, it has done well. But if you look back to, all of the teens, right? Uh, Nvidia was largely what you would call a value stock, right? Like momentum did not work well on it. Um, and so when we look at the S&P, what largely happens when you're in a bullish trend is you have, whatever the current regime is in terms of what people are pricing in, you have rotation between those different sectors that are, continuing to do well in this current regime. And so while the broader trend is bullish, you have rotation between, first the Mag 7. And then after we had a lot of rotation between the Mag 7, we started to see rotation between sectors. And eventually, what starts to happen is you lose a bid to a part of that rotation. And we've basically seen that. For example, Nvidia has stalled out for 7 months. Microsoft has stalled out for, since early 2024. Apple has kind of gone up over the last year, 10%. Um, Netflix is kind of beginning to sell off. Um, Meta is, also losing its momentum. And when you've started to see, other parts of the other sectors uh, catch a bid, energies, financials, etc. But by and large, these don't really make up a significant enough percentage of the S and P to permanent to like allow for a bullish uh, regime. And I think especially when you also lose rotation within tech, right? Um, that is an even uh, almost like more important. So the example that I'm thinking about here is recently SaaS stocks really sold off, and you might think that you would actually see rotation from SaaS stocks into players like Nvidia, maybe Apple, maybe Google, maybe Microsoft, right? Like if the reason SaaS stocks sold off is because people think that harnesses like openclaw are the future and that SaaS stocks are like perfectly replaceable via these harnesses, then why wouldn't those who implement the harnesses and those who provide the compute for the harnesses, why wouldn't they do better? And so um, that is kind of like the scary point, right? And so you still see like dispersion on a daily basis, which is why you can kind of pin the index. But you have not really seen any acceleration back into tech. Um, and then on the index level, technically, right, like this is starting to roll over, and I think you're starting to really see this on an intraday basis. Um, the uh, So when I say crossing under, or basically, I mean literally prices under the 20-day and the 50-day moving average. Um, so bonds, for example, have actually broken out for the first time in a while. And this feels quite different um, to a lot of recent price action. Um, does this mean we're seeing, growth slowing down ahead, or and so we're going to see lower interest rates, or maybe we believe more in the U.S. government's fiscal responsibility? It's unclear, right? Like what exactly is driving this price. Um, but the coincidence of stocks beginning to sell off, rotation into bonds, right? Like that's what you're seeing right now is you're seeing rotation out of stocks into bonds. And that is sort of the uh, compelling argument here for being neutral stocks beyond the technical basis. The um, other kind of confirming argument possibly is, well, gold is so over the place that it's hard to say, but you can imagine that some of this sell off in gold is related to some belief in the fiscal responsibility of the US, but it's unclear. Gold is kind of, you know, doing its own thing right now. It has its own momentum. Um, and I kind of feel the same way about Bitcoin. Like it's also kind of doing its own thing. If anything, maybe the general question is like, would I rather own Bitcoin or gold? And as long as momentum is bullish for gold, I'd rather own gold. Maybe that's the entire reason Bitcoin sold off. It's unclear. So you're starting to see the beginnings of this rotation out of high beta. Well, you've seen this rotation out of stuff like Bitcoin, but you're starting to see some rotation into bonds. And really, the question is, will it A, continue? And it does feel like it will. Uh, and I'll talk about that a little bit more later in the intraday. And B, will the vol complex allow the S&P to sell off? So let's talk about intraday. And I want to change this to regular trading hours. So on Thursday of last week, we had this big sell-off. And we saw follow through into the close, right? This is like classic, bull flag, bear flag, whatever pattern, right? You have this sell off in the on the open, the middle of the day is whatever, you sell off into the close. On Friday, you saw a decent amount of selling on the open, right? And then I don't know what this was really. I think, maybe people expected this sell off and they did too much size in front of it, and then the seller actually didn't come through, and so then stocks bounced, and then there was selling into the close. But this day was the day that a lot of momentum signals flipped short, and you saw 2 consecutive days of selling on the open, selling on the close, and you have not cleared the highs here. The other thing I'll say is on a vol basis, the last few days it's consistently felt like we're testing vol constantly. Like we make a new low, vol breaks out, and then boom, everyone who bought vol gets rocked, right? This happened here, right? This happened here. And so the past few days, like what's consistently happened is everyone who buys vol ends up getting rocked. Everyone who is selling zero DTEs is winning. And so what eventually happens, right, is you don't have enough people buying vol, and you have too many people selling the short-term vol, and eventually that breaks, right? And I think that some of this, literally the systematic selling we see from a lack of momentum in the S&P a lack of rotation working well in tech, those could be enough to ignite selling and cause some of the vol sellers to lose, which will then uh, create maybe like a 5% sell off or something. So that's kind of what I'm expecting to happen at this point. And you know, every single day there's different reasons for why the market gets saved, right? Fundamentally, even if you have rotation, out of equities into bonds, fundamentally this still means that the discount factor for stocks has just become cheaper, right? Like, instead of whatever percent, it's now lower that you're now discounting future growth against. So bonds rallying puts a floor on things. There being some rotation between equities puts some floor on things, right? Short-term rates going down puts a floor on things. People not being able to sell or not being able to win out on their vol creates a floor on things. So the only thing that can really continue to tip this over is if we continue to stay under these moving averages, right? And I do think it's generally makes sense because vol is still bid relative to where it was, and we are very close to crossing under like significant moving averages, right? If we go back to the S&P, like we're very close to crossing under this 100 days moving average. We've retested this level multiple times before. Why do I think this time is potentially different? I mean, I don't know. I don't actually know that this time is different, right? Um, we might see a 2% rally, right? But um, the interaction with the vol complex this time feels different to how it's felt and looked this time, this time, this time, and this time. This time, it really feels like vol wants to blow out. It blows out, and then it comes straight back in, but it stays bid. And so that is sort of what I'm continuing to look for. The moment we start to see vol collapse, the moment we start to recapture, I don't know, like 585, 586 on the SPY, I don't know, this might be over. And we might actually start to see the bullish repricing of equities based on harnesses like openclaw. If harnesses like openclaw need 24/7 compute and we see massive value from them, right? Like OpenAI just acquired openclaw, um, that might be the thing that pushes this market forward. It might, but specifically right now today, it doesn't seem like that's what the focus is. So thanks for watching. Check out my Substack. It's in the description. Subscribe. I'm gonna post sometimes with these like market updates. Um, and good luck out there.